let me welcome Jean Ergas, Senior Economist at Tigris Financial Partners. Good evening, Jean, and thank you for joining us tonight.
Good evening.
Jean, first of all, I would like to ask you, we've heard the quarter data of the luxury stocks, which are Apple and also, let's say, also LVMH. They performed well. Apple a little bit under the expectations, but not bad, and instead Louis Vuitton above the expectations. Do you believe there is going to be rebounds of the luxury sector in the upcoming months?
Look, there might be. The luxury sector is extremely complex because the luxury sector is driven more than by incomes. It's driven by wealth and people's perception of wealth. This is the real luxury, a very expensive luxury. So I think that most probably as people start, for example, to realize that their portfolio values may have gone up, for example, or recovering from a sharp drop, and certain markets start to stabilize, there could be some slight increase. As people in developed economies start feeling that their incomes are slightly more secure at the higher end, they could be spending more. But basically, I think that these are the industries of the superfluous, and they are basically the last vault. So I think there could be some slight rebound, but I do believe that we have the best behind us in terms of the massive creation of the new rich. And that is a very important point in this sector.
Right. Instead, I would like to focus your attention on the Fed because it's the meeting, the first one for 2019. It's the press conference is going to be at 2:30 Eastern Time. So I would like to ask you my first question regarding this topic. Do you believe there is a possibility of zero hikes for 2019? Because we all know that according to the polls and according to the analysts, there is not going to be a rate hike this time, or at least this is how people interpret patient, what Jay Powell used at his last interview. He said that he's going to be very patient with the interest rates. So what is your personal opinion? First of all, do you believe there are going to be zero hikes in 2019, and how do you interpret the keyword patient?
Well, that's the whole point, as you know. I always believe that patience is different for everybody. Some people are patient for 5 minutes, others are patient for 3 years. So it depends how long your patience lasts. I believe that patience does not mean zero hikes. I believe that patience means maybe less than 2. I believe there will be 1 rate increase this year if, for example, the employment metric stays very strong, or if we should, on the off chance, see a slightly faster than expected increase in wages. I would not say that patience means zero interest rates. This is investors. This is not the central bank. Central banks and investors do not speak the same language.
Right, this is true. And on the other side, I would like to ask you, can we expect an economic growth with steady inflation as it is the case in the US currently?
Look, the inflation issue is extremely important. First of all, I think that inflation will not explode in the US for 2 simple reasons. First, there is a large army of people who are not yet back into the labor force, and therefore there's a supply of labor which is bigger than people think, and therefore wage pressures will be less than people think. So that's the wage side of the inflation story. The second side of the inflation story is the use of technology and the construction of platforms for reduction of cost of production and therefore increased competitiveness. So I think we can probably have some growth, relatively low inflation, but I do believe that there will not be a big return of pricing power for companies because consumer means, as distinct from what they are given by the government, for example, in terms of tax rebates, remain relatively limited. Wages are really not going up, and income is the prime driver which allows companies to raise prices.
Very interesting. Yes, I agree with you. Inflation is pretty important, so we are going to see what are going to be the estimates later tonight. But in addition to rising rates, the Federal Reserve is also shrinking its balance sheet. It means that the bank doesn't reinvest bonds it had purchased during the quantitative years. If the U.S. economy was to worsen, Do you think the Fed could at least stop contracting its balance sheet, at least this?
Look, I think they might stop contracting their balance sheet. That is the extreme case. I do not see them any further rounds of quantitative easing. I do not see them dropping rates in a very quick manner. They may buy less, they may sell less than they were selling before, but I believe that it will continue. I believe that they will not go to zero, but that this will gradually continue. They will not stop, they will decrease. For them to stop would mean that the U.S. economy is on the verge of a very bad situation.
Well, very interesting, but I would like instead to ask you a question regarding the European Central Bank, because
Sure.
On Monday, the European Central Bank Governor Mario Draghi surprised many by stating that the European Central Bank can reopen its toolbox if necessary.
Okay.
We all know what it means. It means that he may start reopen the quantitative easing that he just finished December 2018. Personally, do you think this is going to be necessary?
Look, first of all, I believe that the Eurozone is headed for maybe not a recession, but a severe slowing. Two, I believe that some countries might actually be in a recession. Three, I believe the ECB will be very cautious as to the main lever they have, which is interest rates. Why? Because most of the economy is small and medium-sized enterprises, and they access capital via the banking channel. Should there be a move to recession in the Eurozone, I believe that they might, in fact, do two things. They could possibly renovate or reinvigorate the bond buying program, or they could put off and make it very clear that they are doing so any maneuvers around interest rates. We will not be seeing what we saw before. They could also do a third thing, which is they could do the provision of liquidity into the system by the targeted loan programs. But I think at that point, the problem will no longer be a problem of liquidity, because liquidity can be available, but people will not borrow if they do not see the scope to make a profit. So I think that what they're going to do, or could do in extreme case, yes, they could do these maneuvers, they could do maybe a little bit of quantitative easing again, but do not expect anything like before, because if not, they're just going to be pumping money into a liquidity trap where animal spirits are very low and people are simply not investing. I think fiscal policy must now take over.
True, and let me ask you another question regarding Europe. Do you expect that we are heading to a recession, or is you accept what Draghi said? Yeah, we are slowing down, but we are not heading to a recession because our data is much better than what it was at the beginning of 2008. Sorry.
Look, I mean, let's put it clearly. What is a recession, and when does slowing become a recession? This is a point of definition and semantics. Okay, I think that if you are in an environment, for example, of slow growth, of stagnant employment growth, of low inflation, for example, minimal capacity of companies to raise prices, low order books, then I think you're in a de facto recession, if this is a generalized phenomenon. Okay, so I think that certainly the distinction is a very fine one. I believe that Italy is most probably in a recession already. I think that the recessions in certain countries in real terms, in terms of economic activity, they have simply been continuing on and off with brief lapses of small growth. So I really don't believe that what Draghi is saying is absolutely correct. I think he's a very smart man. What I do believe he's doing is he's sticking to a statistical definition of recession as opposed to a functional definition of recession. And I think there's a big danger there if people fool themselves into believing that you can be just fine even if you're at 0.1% growth overall in the aggregate, when you, in fact, are selling into a market where orders have collapsed 20%.
Well, you were talking about technical recession, but I would like then to make a step back and get back to the US. because
Sure.
the yield curve of the 2 and the 10-year bonds is still flattening. How would you explain that?
Look, I would explain it extremely simply. First of all, that I think that at 2.7% there is demand for longer dated paper. There is a lot of uncertainty out there in terms of politics. Okay. So two things are happening. The big investment funds say 2.7, it could go higher the yield, but this is a good point for me to start averaging into the yield curve on the longer end and to start doing laddering. Okay? Those who have money to park will say, let me have some money in a safe haven asset. And the U.S. Treasuries are interesting. At the level of the 2 and the 10 spread, this is a different issue because what we're really now saying is people think that going out on the curve and in time, growth will slow and inflation will be steady. I believe they are right. I think what the market is really telling us is A, it is the safe haven buying, B, it is the laddering buying, and C, there is an estimate that the current rate of growth in the United States is not sustainable. This does not mean the U.S. is going to collapse into the Great Depression tomorrow.
So do you believe that the U.S. Treasuries are our safe haven still, or they are not anymore what they were before? Because many analysts and also strategists were supporting the idea that the U.S. Treasuries are still our safe haven asset. What is your personal opinion currently?
I think the U.S. Treasuries are still for many a safe haven asset. I think the U.S. Treasuries are still seen as the risk-free asset. The U.S. Treasuries are still seen as the pick of the crop in sovereign debt. Will you become rich most probably by buying risk-free assets in the form of treasury debt of any country? Most probably not. But not everybody is going to have all their money in risk assets. So it is, let us put it this way, non-equity asset by default. So I think there's an underpinning there of asset allocation, and there's also going to be an underpinning of recycling of trade surpluses. Now, the very interesting question is what happens if China's trade surplus with the U.S. shrinks because of the agreements we may come to, and they have fewer dollars to reinvest? What will that do to the demand for U.S. paper? And that is the open question. But I still believe, right or wrong, that many people see it as this is the safe haven asset. And they also see it as an asset because interest rates and yields have somewhat gone up. They still now see it as a place where for permanent purposes they can have an asset allocation to rather than simply parking it before they put it in stocks.
Thank you very much, Jean Ergas, Senior Economist at Tigris Financial Partners. Thank you for joining us tonight and thank you for your analysis.
Welcome. It's always a pleasure. Thank you.
Have a good evening. Well, let me